Hello again, this is Nick Kazine, again for the weekly market update. I'm the Chief Operating Officer for BDSec. So to get into what's happened this week, let's start with the political landscape. As everyone probably knows, the Prime Minister is under pressure to resign his office. There's been 2 votes scheduled for this, and they've been delayed. So suffice to say that there's a significant amount of political instability at the moment, and uncertainty. We think that issues like a change in government obviously pressure the investor sentiment towards Mongolia negatively. That goes not only for the Mongolian equity market, but certainly the bond market and foreign direct investment in general. So it's understanding that a vote will occur perhaps next week, but then also the Parliament has to take up the issue of the budget. The budget was announced, the proposed budget was announced a couple weeks back. It has some controversial elements to that, not the least of which is that the projected and proposed budget actually has debt to GDP going to the 70% level. In Mongolia at the moment, the statutory limit is at 40%. And in order for this debt ceiling to be raised, it requires a 2/3 majority of Parliament. That's a very, very significant number, and it's even more daunting when you consider the level of political upheaval at the moment. So it's unclear how the process is going to unfold, and it's also unclear how the government will come together with a 2/3 majority to raise that debt ceiling and ultimately pass that budget. And so that's something to watch as well. So as we look to the end of the year, actually it was just announced today in a Bloomberg article. One of the mining ministry people made a comment in China saying that the Prime Minister did in fact in early September direct the government to resolve issues surrounding OT Underground. Obviously that hasn't happened yet, but maybe it's somewhat reassuring to know that those directives were actually made. It's generally unclear what's holding the project up in phase 2 funding still, but it's pretty clear that the tax dispute and then also cost overruns still loom large where that's concerned. So to discuss the Mongolian Stock Exchange a little bit, this was another week where trading was largely flat. Don't know the numbers right off the top of my head. We would basically draw investors' attention to companies that have a great deal of their revenues and earnings in foreign exchange. And the reason that you want to be looking at companies like that is that the demand for some of these Mongolian products that are sold overseas are not going to be affected by the current slowdown economically and the general uncertainty around the political situation. So 2 stocks you should be looking at that fit this profile very well. Number 1 is Gobi Cashmere. It's a leading cashmere company in Mongolia. It's one of the largest companies that trade on the Mongolian Stock Exchange. And they have about 50% of their sales that occur overseas. The worldwide economy is in pretty good shape. The economy for the richest 1% of the world is in excellent shape, and cashmere is a product that is experiencing high demand across the world, be it in Asia, America, or Europe. And so having that demand from these other countries is a two-pronged benefit. Number 1, You're not affected by the local economy. Number two, those revenues in foreign exchange actually represent much higher revenues in Tugrik, because the Mongolian Tugrik has experienced a pretty dramatic depreciation in the last 2 years. It's stabilized around the 1850 level. So if for investors that are interested in Mongolia but concerned about foreign exchange rates, Gobi Kashmir fits this bill very well. The other one we think you should look at also is Darkhan Neki, symbol NEH on the Mongolian Stock Exchange. And this is another company that gets a substantial amount of their revenues from foreign exchange. And in fact, they're a leather company and have cooperated with Zara, which is a very high-end leather brand in Europe. And so they sell a great deal of their products internationally. It's a very high-quality company, and they're benefiting greatly from foreign demand, from premium brands, and then not to mention the fact that they're getting their revenues, much of their revenues in foreign exchange. And so both these companies, despite being up about 100% in the last 12 to 18 months, trade at single-digit multiples on trailing earnings. They're both just a little bit less than 10 times. Both experienced dramatic growth in 2013 and 2012, and we think those trends are definitely continuing. And the fact that they have so much leverage to foreign demand and foreign currency, that's going to actually offset the declines in the Mongolian Tugrik. And the benefit that you have with these companies is that if OT gets resolved, if the economy begins to experience a recovery, and the currency and foreign direct investment turn up, well, that means more investment is going to come into the country, and there's going to be more investors buying these shares. They're both what we would consider as blue chip companies, and they're on the short list of just about every investor who invests on the MSC. It's worth also mentioning that Vinegold Hotel, that's a company that is leveraged to more of the tourist trade, but then also they have the benefit of foreign exchange gains, because their pricing is basically based on a US dollar price. It's not based on a Tugrik price. And the vast majority of people that stay there are foreigners. And so we think that not only not only do they have a good business, they have an outstanding asset, and so look at that as well. So that's going to be the end of our weekly update. We'll be back next week, same time, and discuss the current economic and political landscape in Mongolia, and then also come up with some more equity ideas for investors to look at. Thank you for listening.